Hello. Welcome to my channel, my dear friends. My name is Avilash, and I'm a trader next door. In this video, I'll be analyzing the charts of Euro, USD, and GBP, USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, if you traded on FOMC or after FOMC, probably you are smiling right now. And those who miss FOMC like me, okay, you must be sad. To be honest, FOMC comes at a very odd time. Okay, usually it comes around 11:30, 12 o'clock at night. Yesterday it came around 12:30, so I slept around 11:30. But when I saw in the morning that market formed such massive candles, obviously, I felt bad a little. And I guess that most of the people from India, or most of the traders from India, Pakistan, Bangladesh, or from Asian region have missed because of the weird timing. So this is the chart of Euro USD in front of us, and we can clearly see that market flew. Dollar takes a dive after Fed signals rate cuts next year. You can see dollar was under pressure on Thursday after the Federal Reserve's latest economic projections indicated that the interest rate hike cycle has come to an end and lower borrowing costs are coming in 2024, and this was the main reason why dollar started falling. Dollar takes a dive. Yeah, okay, sorry. Both the euro and Japanese yen jumped in response, with the ECB preparing to announce its policy decision later on Thursday, and the Bank of Japan coming up next week. And if you look at the economic calendar, and if you are a euro lover, then you need to be extra careful because ECB is coming up with interest rate decision, so market will be volatile, or every euro pair will be volatile. And moreover, during the US session, retail sales coming up. Retail sales will not have a deep impact like FOMC because usually we don't get to see a complete trend reversal after retail sales. Market will be volatile, you need to be careful. But at the time of monetary policy statement, my dear friends, be careful with your open euro and GBP positions. You can check out the timing on the economic calendar. Just go to economic calendar and change the time according to your time zone so that you can be prepared. Okay, so this is the chart of US dollar index in front of us, DXY. As we all know it very well that for the last couple of weeks, DXY under selling pressure, but still DXY was trying to recover for the last couple of days. DXY was unable to break the crucial level of 104.50 and it was struggling here. And after FOMC, this is what we can see on the chart right now. DXY fell sharply, and right now DXY is standing at the last support of 102.50. Why last support? Let me show you. For that, we need to go to daily chart, and you can see that if DXY breaks 102.50, we do not have any immediate support, and maybe DXY will be heading towards the level of 100. And obviously, you need to plan your trades accordingly. So this is the condition of DXY. Okay, so do not gamble. You already have a buy position on Euro USD, then obviously you don't need to exit because further upside is very much possible. We can clearly see on the chart market is extremely bullish, and considering and respecting the trend of the market, you should be on the buy side only, because if you take a sell or if you're planning to take a sell, then there's a high chance that you will be trapped. So don't make the mistake. After the monetary policy statement, okay, if things change, that's a different chapter. But right now, when we are seeing the market in Asian session, we can clearly see the market is bullish. As a result, we need to respect the trend of the market. During the news or after the news, okay, try to follow the trend of the market because market will be volatile. And probably you guys, you know it very well that when fundamentals dominate the market, technicals do not work. So plan your trades accordingly. Okay. So already the market is very bullish, so if you have a buy, be on the trade. But on the other hand, if you have missed just like me, then you can wait for the market to come for some retracement. And right now the only logical level that that is in front of us is around 1.0890. Around 1.0890, we don't have any exact levels right now, sadly. Why 1.0890? You can see here that we are expecting the previous resistance will be acting as support here. Okay, so that is the only level in front of us where we can expect to go for a buy position. And during the day, okay, during the day, if you see the market is coming for retracement, because right now we can clearly see that there is no sign of retracement, but obviously at one point market will come for retracement. It may be during the European session, it may be during the US session. So when you'll see the market is coming for retracement, you just draw Fibo like this. Okay, you just draw Fibo like this. You can start from here or you can also start from here. I'm teaching you this um, so that you can draw your own levels. Okay, and you need to start from here only. This is the 1 hour chart here. I am using Fibo from here. As per the thumb rule, you should draw from the lowest point of the chart, but right now I cannot explain. It's a long story why this point. Start from here. Okay. And stretch to the highest point. Let's assume that Euro USD starts reversing from here. Then you just need to stretch till here and wait for the market to come down. Okay, so use Fibo like this, because you can clearly see I'm using 21 moving average. 21 moving average is also not working properly. So the dynamic supports are completely helpless right now. They seem to be helpless, and 50, 100, 200 they are obviously are of no use right now because they will be far off. So we do not have any dynamic support. So as a result, we have come to Fibo for help. For that, okay, when market will reverse during the European session, US session, just draw just draw Fibo from here and just wait for the market to come down. Once you'll see the market is taking support and bouncing, go for a buy. Otherwise, 1.0890 seems to be a level right now. Let's wait and watch. Okay. In case of GBP USD, also same thing. Logically, we have 1.2631 or 30 or around 1.2630. We have a support level, but right now we cannot see the market is going for some retracement. So as a result, during the day, okay, if you see market is coming down for retracement, you can just draw Fibo from here, from this particular point of the chart, and just stretch it. So if after a few hours, if you see the market is reversing from here only, then this will be your first support where you can expect the market to bounce. But keep in mind, at the time of news, try to avoid Fibonacci, because Fibonacci doesn't have the strength to protect the market, protect the levels at the time of news. Okay. Nothing much to discuss right now. Things are not very clear to us because we have already missed the train. Okay, so waiting for proper retracement is the only solution, because if we enter on the middle of the chart, then obviously there's a high chance of being trapped, because when the market will come for retracement, obviously we will panic. So to avoid that, okay, you need to wait for the market to come down for proper retracement. And you need to be careful at the time of news also. On other USD pairs you can trade, there is no problem, but in case of Euro USD, GBP USD, you need to be extra careful because of the monetary policy statement. Okay, so that's all from my side, my dear friends. Bye bye, take care, see you tomorrow, and be careful.